Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players are doing in the market and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of historical monthly demand and support. In fact, from here, multiple rejections to the upside have been created. We can see here how every single time the market created a quite strong rejection to the upside. Also here, we can see how the market respected here, again here. And just a few months ago, we had a last test of this area, a rejection to the upside. And now the market just headed again towards the area, has now tested it. And there is definitely the possibility to see another potential rejections to the upside away from this area, as the market has already done every single time that it tested this area in the past. So from a monthly standpoint, everything seems quite bullish. Now, if we zoom in into the most recent price action, what we can also notice is that from a pattern standpoint, we now have a potential creation of a monthly inverted head and shoulders, with the left shoulder here, the head here, and the right shoulder here. And there is definitely the possibility also for the creation of this monthly impulse correction and impulse pattern to the upside, which is one of the most popular patterns in the market. And generally speaking, when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50%, 0.618, and 0.786 Fibonacci retracements here, lining up exactly with this previous level of support, which is currently still acting as support. And this creates confluence of support at this area, which we could in fact expect this market to want to reject to the upside. So from a monthly standpoint, everything seems quite bullish. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, what we can notice is that we did have the creation of this weekly M pattern. Now, generally speaking, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside, effectively to go and complete the M pattern at the neckline. So the previous support turned resistance. And in fact, I did speak about EURUSD when the market was here, and I explained all the reasons for which we could expect this rejection to the upside, completing this M pattern at the neckline, which is in fact exactly what the market gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. Now, dropping down the daily time frame, what do we see? Well, from a daily standpoint, there is one very important thing that we must notice. After the market completed that weekly M pattern, immediately it started getting rejected to the downside. Now, what this usually means is that the market is heading towards the test of a quite important structured zone. In this case, the structured zone that I'm speaking about is exactly this previous daily support turned resistance here, which is now once again turned support here. So there is the possibility that this market might want to go for a deeper test of this support and only at that point continue higher. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders, and we check the data for the euro, the first important thing that we have to keep in mind is that if we're checking the data for the euro, we're actually already checking EURUSD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been decreased. We went in fact from having 152.3k net positions positions, all the way up to having, all the way down to having 52.8k net positions. So essentially, we had a strong decrease of the net positions, meaning that institutions have been moving to the bearish side for EURUSD. And in fact, we can notice how for quite some time, shorts have been increasing on this pair, going from 83.3k shorts from an institutional perspective, all the way up to 158k shorts. Longs, at the same time, you would expect them to be decreasing, right? However, that is what happened for most of the time. In fact, longs went from 235k to 195k, but now they're starting to get once again increased, going from 195k to 210k. So it seems like we're starting to see once again the start of a potential shift back to the bullish side for EURUSD. Even though it is still a bit premature to say, there is the possibility that this increase of longs instead of decrease of longs, which is what you would expect, signals the start of a new accumulation phase to the long side of EURUSD by part of institutions. Now, if that will be the case, it means that inside of this support area here, all this area is where we could expect more potential accumulation of longs. And at that point, if that happens, there is a good probability of getting a potential push higher away from this zone. So what I would expect in a situation like this. Now, by the way, make sure to also go and join my free Telegram channel, which you find linked both in description and in my bio, so you never miss new updates. Now, as I was saying, in a situation like this, what I would expect? Well, in the very last video, I explained all the reasons for which from here we could expect first the creation of this new lower low, and then this rejection to the upside. And in fact, that is exactly what the market gave us. And I will link also this previous analysis in description, so you can go and check it out for more free education. But in a situation like this is the area and this is the moment in which you have to be more cautious, because we have to wait to see if there will be more accumulation of longs from an institutional perspective. So if with the new report, which is coming out tomorrow, we will see net positions getting increased. So institutions that have added longs during this move to the upside, at that point, what I would expect is that in this area, we get more accumulation of longs, further increasing the probabilities of a potential push higher away from this area. So if we will see more accumulation of longs, in a situation like this, what I would expect, as usual, is that if the market would shift from an intraday bearish market to an intraday bullish market during this push to the downside, at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside, because as usual, trading is reactive and not predictive. And the best time frames when it comes to the directional aspect of the market are the monthly, weekly, and daily time frames combined with the COT data. But when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, if the market shifts from an intraday bearish to a bullish market during this move to the downside, I definitely would not be surprised to see a potential push higher away from this area. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.